Nixon 5, actual size ball. Everything appears in the mirror may not be as large as you think. I'm the Einstein Wall Street out here, out front of the New York Stock Exchange in Experience Square. And we know that life is becoming very experiential. So there's nobody better to experience life with than my man, Dan Ives. You the man. Thank you for coming.
Great seeing you.
It's absolutely a pleasure. So we are in the last day of trading of the month, the quarter, the half, right? And that's a mouthful in its own right, because every possible thing that could have been thrown at a market in this month, in this quarter, and in this half has happened. From wars to tariffs to oil going from 63 to 120 and sustaining itself there. Every possible thing from every country in the world to every part, and yet the market still trades at 52,000 on the Dow, 7,500 on the S&P. This gentleman called that 7 number in front of the S&P almost a year ago, and nobody believed it. So I need all the different components that are going into this market. Each day is culminating into something that's actually too confusing for the Einstein, right? So E equals MC squared doesn't mean anything to me anymore. There's very few people that could really break this thing down. Obviously, Dan Ives is the one, and so I've brought him in here to try and break this down.
Great, man.
I need you to explain to me where we're at. We're coming into the end of this quarter. Today's the last trading day of the quarter and the half. We have a new Fed chairman, right? Are we raising rates? Are we lowering rates? Where are we? Is the war still affecting the market? Where is tech, software, and chips? Where is it all, and how does it all fit together?
I mean, look, it's obviously very complex in terms of all the variables. But
That's an understatement.
But I think the reality is, like, look, oil is $70 or go. You know, we talk about it like
at
the 7 handle, that the long curve. You know what it's showing. That's important because for Warsh, it's going to give him more flexibility to maybe not do a hike. I mean,
right. That's what when we spoke a few weeks ago, we were looking at a potential hike. Yeah. Because oil was sustained for months already above 90, 100.
And you likely still maybe do a hike or a hawkish tone, but because of oil, it gives a little more flexibility because that's coming off and that's direct in terms of inflation.
Were you surprised? I know Mr. Trump promised us that inflation was going to come down, even though he said he didn't care about inflation, that the price of oil was going to come down aggressively. When we spoke a few weeks ago, we had lived for the last, I would say, 2.5 months at a price of oil above the 90 to 100 level for a while. We talked about the massive inflationary implications of that. And are you surprised we were able to get down into the 70s?
I'm not. I mean, we talked about it just because it was just the view that, like, if you get this to unlock in terms of Strait of Hormuz,
right,
given the glut that would come on, you know, the long end of the curve would be somewhere in the 70s.
Right.
So I think that's happened.
Okay.
At the same time, tech, you know, memory stocks.
Explain to me, what are memory stocks?
Memory stocks basically feed any device that you deal with. Okay. Memory is ultimately.
And which are those memory stocks?
And those are SK Hynix, SanDisk.
Okay.
You know, if you look at
so they create the components inside of the devices that make it possible for us to have the memory.
Exactly. And then when you think about the AI revolution and data center,
right,
memory is so important.
It is that. It's so important.
So memory right now, we're almost going through like a memory super cycle.
Okay.
Which is important because now, even though prices is increasing because demand and supply.
Right. I mean, let's look at SanDisk going from 200 to 2,000 virtually. Why did that happen? Because there was suddenly a surge in demand for memory, or did something else happen?
Surge in demand for memory.
Did we suddenly just wake up to that, or wasn't that always around?
It's about the data center boom.
Right.
The ripple effect.
This is the secondary, tertiary stuff you've been talking about for a while. Exactly. But why did this just sort of happen? Did some part of this thing change?
It's the timing.
It's the timing. Okay.
And
so we're getting closer to the actuality of the data centers, and so that the memory and those components are becoming closer to being done. Is that kind of
closer to where you're seeing the launches of so many of the data centers?
Right.
That's why memory stocks have been so bullish.
Okay.
But on the other hand, hyperscalers, Microsoft, Oracle, they've actually underperformed because those are really more CapEx.
Right.
You know,
well, those are the guys who each put about $600 billion. They're not AI companies, but they are visionaries. And they did, a few months ago, they each put in about 600, Oracle, Microsoft, Google, they each put in, they made a commitment to data centers, and they each put in $600 billion plus.
And the origins of AI starts with the hyperscalers.
Right.
Microsoft.
Explain what is a hyperscaler to
and
the
those are the
general
cloud,
audience.
as we've talked about many times, those are the cloud technology
Right.
companies that are basically building and driving the data centers. The point is that the spending, the ripple effect,
Right.
is happening in this market, which is why, you look at S&P in terms of the quarter, massive move.
Right.
Tech, bad June, but overall it's been a very good year relative to
Right.
the rebound. It speaks to my view that you're going into a market where the next leg continues to be higher on
It's going to be a higher leg. So let's talk about that. We've had this wild rotation. Yesterday, the market was up 300 on the Dow, up 100 points on the S&P, which is equivalent to a 1,000-point move. Yet, the advances declines were 50-50. So what that means to me is that we're in a massive rotational mode here. We're selling the outperformers and we're buying value. We saw a reconstitution of the Russell last Friday.
Yeah.
Massive volume, $14 billion. It's been on a roll. But explain to me one thing. We have chips, we've got software, and we've got tech. They are three different sectors, although they're very ancestral in a lot of ways. We've seen them go through really hard times. Software got down to 25 cents on the dollar.
Yep.
Chips were the flavor of the moment, and then they became no longer that. Tech was suddenly a bubble, and now it's, and it had a rough June. Explain to me how they are related in a lot of ways, and is there a way to explain the fact that they sell one and they buy the other? Because they are very rotational that way.
Chips are foundational to the build out of data centers.
Right.
But it's ultimately software and the use cases. Data centers are being built
right.
for what will ultimately be the software.
Okay. Oh, they're being built to make GPUs, isn't that?
But I'm saying Palantir,
NVIDIA.
Snowflake, NVIDIA drives it. But the point is, it speaks to our point that the ripple effect, it's going to go from chips to hyperscalers,
right.
to software,
right.
to cybersecurity, to just broader infrastructure.
Okay, all ending up with a massive build out of huge data centers everywhere, including space. Right? Are we talking about data centers in space?
Not yet.
Right,
Yeah,
but isn't that one of the SpaceX case scenarios?
Of course. But in the near term, it's really about more data centers are under construction than active data centers.
Right.
And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Okay, so the necessity to build, we underestimated the demand for GPUs. GPUs are what fuel AI, right? So we underestimated the demand for AI and for GPUs. So we've had to fast track our way to building data centers, right? That was one of the big things that got us through 2025 and into 2026, because those data centers are the ones that are going to be the lifeblood of the AI revolution, correct? Okay,
100%.
What people did underestimate was that if we say we're going to be building data centers, everyone thought, oh, that's 5 years out. And you and I talked over and over and over again. Wait a minute. Yes, the completion is going to be 5 years out, but the effect it's going to have on the overall economic landscape starts today. Right? Explain that to me.
Because from Claude to ChatGPT to all the models that everyone's using on the consumer side, but more and more pharmaceutical companies, biotech, financial services, that data that you're digesting, almost mini sort of computers that are basically new agents, you're building everything. So that's just going to help companies, help people.
Right.
It's going to help productivity. It speaks to even like what the Fed talks about from a productivity perspective. My whole point is, we're still in the early innings of this all playing out.
Okay, so let's talk about for a second. We had our first Fed meeting with the new Fed chairman. Give me your takeaway on what he said, because the way the market reacted aggressively in a couple different ways. It was up, 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 down, down, down. What was your takeaway from him, What is your opinion about him? And how do you see this whole thing unfolding in the new world of a new Fed chair?
Big fan of Warsh, in terms of, I think, what he's going to do. Hawkish in terms of maybe the perception of him.
Right.
And look, given oil, inflation's still stubborn. It's not 2%.
Right.
2.5%, 3%. Right. So he does need to come in a bit more hawkish.
Meaning that he may have to raise rates?
May raise rates, tightening of the balance sheet. But I think over the coming years, he will cut rates. And that's bullish for the overall market.
Right.
So I just think that we're going through what ultimately will be just a transitionary period.
Okay.
But I'm a big fan of Warsh, and I think he's the right person to sort of, to take the Fed into this next era.
From your observation, is their relationship, the fact that we now have a Fed chair? Look, Mr. Trump is the one who picked Jay Powell. Then their relationship soured, right? Over a number of things, whether it's ego, whether it's the way the market was, or the economics of it all. We now have the next chair, who was also picked by Mr. Trump. Our impression was, it's going to be all fine because he gets to tell him what to do. That is not the case. No. We know that, I think Kevin, new Fed chairman, made it very clear that they're going to maintain their independence, right, the whole time.
That's good seeing you.
What's up?
Are you filming right now?
Yeah.
It's okay. You can be in the film.
Look at this.
All right, mate.
This is one of my...
Hi, Peter Tuchman.
Andrew, I love
This is one of my great friends, Andrew. This always
elegance
dressed.
At its best.
I mean, such an expert when it comes to, like, crypto, markets, digital, and everything. And
you going in to do something fun?
Yeah, Zero Hash Summit, talking about blockchain, tokenization.
Cool.
And so I just joined a firm, Chainlink Labs, 3 weeks ago.
Okay.
I've been at each
it's a huge move for him going there, and I'm so excited for him. And always...
Hey, you too, So, all right.
Dude,
all different levels of elegance here.
Pleasure
Good to meet you, sir.
Yeah,
pleasure.
Home.
Okay, so we
That
just
was
talked.
great.
So who is he? Tell us.
So Andrew was at Toro, now at Chainlink. He's one of the pioneers in terms of the view of, like, Bitcoin and digital assets.
Really? Oh, okay, cool.
But look, my whole point, and I know we're out of time, but my whole point is, Warsh is the right guy to lead the Fed into this next.
Right, we can always
era.
sense that. It's just a feeling.
And I think I think he actually did, like, a really good job. And I think now we go into a second half of the year where obviously Fed's so important, but it's also important just to understand, like, to see tech earnings,
right,
to justify the multiples.
Right.
We're going to go through gut check moments.
Okay.
But overall, you look at the first half.
Right. Yeah. What's your report card for the first half?
I mean, you call it an A- relative to going through Iran, Venezuela,
oil, all that.
Oil.
Okay.
So because it's still tech driving the market higher, which all starts with AI.
So I need 2 more minutes. So let's talk about what the next 6 months look like. We got obviously starting a new quarter. We have the next we had earnings coming for the second half. The second quarter are going to be coming out. What are your feelings and predictions on that?
I think we're going to have a very strong earnings season.
Okay. Even having gone through all the, look, you always talk about this. Net, you've been a firm believer and you're a forever bull, but you're very, very distinct and decisive about the fact that along the way, we're always going to have a pebble in our shoe and a bump in the road.
100%.
But net, it is a bottom left, upper right curve.
And it's what we see in Asia. It gives us full confidence going into earnings. You'll have some speed bumps, but I think the path for tech stocks continues to be higher.
What about the fact that you're seeing stuff like these massive sell-offs in Korea and stuff like that? Is the market literally a day at a time? We've got huge downs and huge ups.
But the Korean market, the Kospi's up 95% this year.
Yes, yeah. Okay.
So the point is
so sell-offs are
it's very easy to be like, it's down, it's up 95%.
Right.
So my whole point is, like, we're going to go through periods like that. But I still believe it's like we're early of a multi-year.
So what you and I try to do, and I think it's important to note, is we try and demystify the catastrophism of mainstream media.
Yep.
That's what makes Einstein and Ives so special.
100%.
While in France, everybody knew who we were. I'm telling you, from every brand to every marketing company to everybody has watched our show, watched us on CNN, watched our YouTube. And their main point is that everybody is being scared by the catastrophism that mainstream media has, and that you and I are able to demystify and deconstruct the markets. And that's our secret sauce. Amazing. Jalen Brunson, Nixon 5, hot jambalaya. I love you, man. Thank you.
You're the man.
Yeah, you're the man. Einstein on Wall Street, Einstein and Ives, Dan Ives, the best of the best. That's all I got to say about that. Next, Tears coming up. We'll see you in a couple of days.